Mo. Well, ladies and gentlemen, thanks so much for coming. I'm going to ask you to take your seats. We're about to get started just in a few minutes. Bring your coffees, your waters, your croissants. Come on over. Excuse me. We're going to get started. You can take your seats. Hello, excuse me. We're going to get started. You can take your seats.
Oh, thank you.
Yeah, of course. Well, thank you everyone for taking the time. It's hot outside, but it's cool in here, and we've got quite a lovely program for you guys for the rest of the morning and afternoon. I'm Frank Chaparro, Head of Special Content at GSR. I'm excited to introduce to the stage Eric, the CEO of Injective. He's going to give a little bit of a breakdown about what they've been working on these past few months before we get into many different topics at the intersection of crypto, financial services, AI, and regulation. Hope you enjoyed the session, and we'll see you soon.
Hey, good morning, everyone. I'm Eric, and I'm the co-founder of Injective. So take a second and notice where you're sitting. We're a few blocks from the Capitol in a city where the rule of American finance get written. And look at who's in the room, the largest institutions, innovators, and the regulators who oversee the very markets we came to talk about. I've been in the digital asset space for quite a long time, to say the least, and it's rare to see these three groups of people under one roof. Together, we're working to create a financial system that will change more in the next 10 years than it has since the last 100. And today, we're going to show you how we'll build this new on-chain economy together. Modern finance is the most advanced machine we have ever built. We've moved trillions of dollars every day, and yet it still runs on pipe that was built decades ago. Trades take days to clear, markets shut down midday, and take the weekend off. Money is locked in opaque, closed accounts. A fee is taken at every single step, hurting our bottom line. Access is also limited to those with power, influence, and extraordinary wealth. The financial system grew, but the plumbing never really changed. So we asked the obvious question that no one seemed to or dare to ask. What if we rebuilt the pipes from scratch so modern finance could actually run on modern rails? An infrastructure purpose-built for the on-chain economy. And that's why Injective exists. The order book, the instant settlement, the matching engine, and liquidity all live on the same financial infrastructure stack. Perpetuals, tokenized stocks, and every other market are open to everyone, regardless of who you are, where you live, and what's in your bank account. A market has meant the same thing for 400 years. A place, a floor you have to be let onto, and a bell that decides when you're allowed to buy. On Injective, that market stopped being just a place. It became a network that never closes, it has no floor, nobody decides whether you're allowed in or not. For years, we called this on-chain finance, taking what already exists and putting it on a more performant, decentralized rails. But I'm going to be honest with you. That prior framing was simply too small. Over time, as we continue our journey, we realized our vision was much larger than finance alone. What's being built here at Injective is an entirely new economy that lives on-chain, a blockchain where users, institutions, and AI agents trade, tokenize, and transact at scale. Welcome to the new internet economy. In this new dynamic system, we are building markets that will operate 24/7 and settle in milliseconds. For the first time in history, user will not all be human. People, institutions, and AI agents will participate in this new economy side by side. We're building this new economy right here in America, open to everyone, everywhere. And none of this is theoretical anymore. I want to share with you some numbers that will show you just how far we've come. Injective has not only brought billions of trades, payments, and transactions on-chain, but have also expanded utilities across the board for its underlying infrastructure. We've moved more than $1 billion of real-world assets on-chain, making Injective one of the largest RWA chains in the world. More than 500 on-chain assets are accessible on Injective today, not just crypto. Names like NVIDIA, Palantir, Microsoft, and SpaceX, just to name a few. The on-chain economy is already here, and it all settles in under a second, secured by institutions and users around the world staking INJ. But access meant very little without legitimacy, and it's an important element we've been working on for the past 2 years to gain further regulatory clarity both here in DC and abroad. So I have 2 exciting pieces of news to share today. Injective has already filed with the SEC to become a registered transfer agent. And with this move, Injective is looking to become a legal rail for RWA record keeping in the United States. This is foundational for tokenized assets and products we're bringing on-chain. Injective already helped to pioneer the infrastructure used to tokenize assets spanning treasuries, commodities, and equities. And now we'll be able to do this at scale right here in America. There's also another major piece of news today on the regulatory front. Across the Atlantic, Injective has published its MiCAR white paper in Europe, which clears us to operate across the entire continent. This will allow us to expand our activities and institutional collaborations across the EU and its 27 member countries. This marks another major vote of confidence for Injective and its rapidly growing ecosystem. These milestones show what is possible when innovation and regulation move forward together. That is the economy we want to build in partnership with the institutions and the regulators in the room. The most serious names in the world are already built with Injective. Binance, Circle, Chainlink, Brevin Howard, Kraken, Revolut, just to name a few. These leading enterprises currently working alongside Injective to spearhead a new era of finance. And today, I get to add one more major name to the list, and this one likely reaches nearly everyone in this room and millions globally. Coinbase is already set to onboard native INJ to its platform, and because it is native, deposits and withdrawal run on Injective's lightning-fast rail that are purpose-built for finance. Moving INJ in and out of the largest exchange in the US and abroad will soon be effortless, with direct access to Injective's apps and on-chain markets. For most people, the hardest part about crypto has always been the first step of onboarding. But with Coinbase, the first step is easier than ever with one of the most trusted names in the industry. And believe it or not, everything I just covered was simply to warm up. I watched this company go from just an idea in a room to a giant in crypto, built right here in the heart of America. And so far, I laid out our vision for a new internet economy. Next, I'm going to show you the 3 engines that run it. One lets you access every single market, one lets AI transact for you, and one brings the entire real world on-chain. So let's start with trading. Many may not know this, but Injective pioneered one of the first on-chain perpetual futures. This means execution, matching, and liquidity all operate without any centralized intermediary in a single step. Over the years, we've not only grown into one of the largest chains for perps, we've also expanded to cover every single major financial primitive: FX, commodities, equities, prediction markets, and even pre-IPO markets. So when a major IPO like SpaceX hits, price discovery is already happening across Injective's on-chain markets. And none of this sits in a silo. Liquidity is available across all these markets with the help of major institutions integrated on Injective. The native order book, RFQ system, and binary options for prediction markets are all served under one unified liquidity that lives on-chain and is available at a moment's notice. So when a new market goes live on Injective, it enjoys very deep liquidity from day one instead of starting from zero. This gives both the builders and the user the highest level of capital efficiency in an entirely decentralized setting. Now, on to the second engine, and this is one where I think people are underrating. Markets until now have almost exclusively been run by humans. We sleep, we look away, we can follow maybe a few screens at best, and react slowly. A market moves in milliseconds, and a person can at best react within seconds. But that gap is about to stop mattering, because more and more of the new market participants are AI agents, not humans. As a result, these markets are rapidly becoming fully autonomous, and the rise of agentic finance is really just getting started. An agent does not care about your thesis or your conviction, it cares whether the venue can keep up. Can a trade settle the instant it fires, or the fees low enough to run millions of simulations in a day? For an agent to perform, the chain underneath has to be built with agents in mind. And that's exactly the engine Injective built for, an optimized infrastructure stack where agentic finance can actually thrive. We believe AI lets us go further instead of replacing us. Set the goal, and the agent does what no human can: analyze and execute across every single market all at once. So today on Injective, you can use Dap Builder to create brand new applications using just natural language. And as of this week, we've released a brand new agent SDK, which enables you to launch robust agents capable of trading, launching new RWA markets, arbitraging across pre-IPO assets, or even creating new agents all on their own. The future of finance is users, institutions, and agents working side by side, and Injective is a chain engineered to make it all happen. Building towards this vision of agentic finance requires many bright minds working together. And that's why I'm excited to announce that Injective is now officially a member of the Linux X402 Foundation. Together with members from American Express to Shopify and Visa, we plan on working to create an autonomous payment protocol for global commerce to thrive. And finally, the third engine is tokenization. And this is one I want to slow down on. Stablecoin already proved that it works. Put the dollar on chain and make it actually usable, and trillions of dollars can follow suit over time. And now everyone wants to do the same for stocks, bonds, and gold. However, almost everyone kind of get this part wrong. They can mint a token for a stock, and you find out that the token can't really do anything. You can't borrow against it, you can't trade it with any dev, and it doesn't really earn for you. The asset kind of just sits in your wallet, often no more than just a screenshot of a stock that you can share with your friends, doing nothing and adding no additional utility. So we built a fix with a brand new platform that would change the tokenization industry forever. Today, I'm proud to introduce Injective Mint. Injective Mint, for the first time, will enable real-world asset issuance with immediate day one utility, all through one intuitive platform. It's accessible for institutions, users, and yes, even AI agents. Any asset you can imagine can be tokenized with Injective Mint, from equities and ETFs to credit and real estate. And whatever you choose to issue gets immediate utility across the entire Injective ecosystem, whether that is enabling secondary trading for RWA, borrowing against the asset, or even using it as collateral to trade perps on chain. All that and more is possible with Injective's infrastructure today. But here's the part that matters the most. Today, tokenization is often done behind closed doors. One company decides what gets tokenized, on what term, for whom. Injective Mint kind of take that door off its hinges. A fund, a fintech, a bank, and any person with an idea can bring the asset you see on screen, on chain. No years of paperwork needed and no middleman in between. Think about what Stripe did for payments. It took something only banks could ever touch and handed it to everyone with an idea. That's what Mint does for real-world assets. And I want to give you all here today a first look at Injective Mint demo, so you too can experience this immense potential. So here, you have an intuitive platform that does all the heavy lifting on the back end. So let's tokenize the gold ETF here. You simply input the asset name, ticker, and type. You can select the jurisdiction for which you want to enable access for, enter the amount and the entity, and of course, enter the actual asset custodian you're integrating for the issuance. And just for fun, you can obviously select the official asset image to live on chain as well, and voila, it really is that simple. In real time, the backend Injective is helping you to mint the gold ETF on-chain, which you can directly view with products like INJScan, our official blockchain explorer. This is just a demo, but the world is truly your oyster with Injective Mint. I'm excited for all of you soon to try out Injective Mint Live when we officially release it for public access. Now, let's take a final step back to see how the three engines I talk about work together in tandem. On-chain perpetuals provide every minted asset a real market. Agentic finance supplies that market with participants that never sleep, and Injective Mint feeds new asset into both. Each engine strengthens the other two, and the whole system gains momentum with every asset that enters it. A truly compounding economy built right here on Injective. When we started, the dream was on-chain finance, a faster, cleaner version of what we already had. And over time, we realized that dream was simply far too small. And now you can see why. Today, you get to watch a real asset get issued on-chain with day one utility. You watch some of the biggest names in the world building with us. You saw us working across America and beyond to get new regulatory approval. And you saw us creating three engines to drive forward the new internet economy. From finance to new internet economy, that's the leap we're going to take together with all of you. And that is what we've been building towards. This is Injective. And we're only getting started. Thank you all, and welcome to the Injective Summit.
Thank you, Eric. That was great. Next up, we have a really interesting fireside chat with award-winning podcast host Jacqueline Rollins and former CFTC Commissioner Summer Messenger. This is going to be an interesting conversation, not just because we're sort of up against clarity, but also because this is something here at the Washington Association is really special. So we'll get the chairs up here so they don't stand. I've got weak knees. It's really tough, you know. I've been doing a lot of strength training. So he had me doing like these types of things. Box jumps. Really hard. But not Jacqueline, strongest knees in the podcast game.
We're not going to improvise this session the way he just did that. But yes, hello everyone. It is great to see familiar faces. I am Jacqueline Melnick. I'm the founder and CEO of Strata Media. And more importantly, I am lucky to be sitting down with Summer Messenger, the CEO of Blockchain Association. And as Frank mentioned, it is your 1-year anniversary.
Yeah.
Congratulations.
Genius and me, kind of a one-year anniversary.
I know. I mean, when you stepped into the role, you came from the CFTC prior. What was kind of the transition like, and has it gone as expected?
Yeah, the transition was very abrupt because when I was the regulator, we spent a lot of time reading and pontificating and, you know, kind of coming up with our opinions. And this has been nonstop on the ground, you know, meeting with members, meeting with the administration. So it's definitely like the pace, it's very fast. But I think what was most notable to me is just kind of our members. You know, there's so many really smart people out there building really interesting things, and you know, their willingness to be involved in the government to help us, you know, work on a regulatory framework has been really amazing. So a lot of it, you know, the dedication of the members, but also just the amazing things that they're doing. It's beyond what I could have possibly imagined.
So did Genius pass when you moved to the Blockchain Association, or it was like right before?
It was right when I moved. I made
So you caused it.
I made the joke. I'm like, I don't know what everyone else was doing, but I showed up and Genius passed. So.
Yeah, there we go.
But no,
yeah.
There was a ton of work that happened that led to that moment, and I was very grateful to be there when it was passed and signed by the president.
Yeah. So maybe if you get a new job right now, clarity will pass too.
I mean, we got to get clarity.
Yeah,
so.
Yes. What has surprised you the most from from being a regulator to now leading an industry association? Has anything kind of changed your assumption over the past year?
Yeah, I think it, kind of the dedication. I think as a regulator, you're a little bit, we still met with stakeholders, but you weren't immersed in their world. And that how different, what they do day to day is beyond, from what a regulator is thinking that's going on has been really interesting. It's easy to forget as a regulator that people are running businesses, they're building, America, they're building their economy, and we're looking at it only through the regulatory lens. But when you can step back and see how it impacts the entire economy, that's just a view that I felt like is missing from some of the regulatory agencies and the regulators.
Are you more optimistic now about the building of crypto startups, blockchain startups, and companies in general in the U.S. Over the past year?
Yeah, and we've seen it reflected in our membership. We've got members who had, not much of a U.S. presence before, bring new jobs, new business here in the U.S. We've seen a lot of growth, and it's and a lot of new startups. So it's definitely, the U.S. is the leader here, and the companies that, both make up our association, but, make up the digital asset space at large, are really driving the economy.
Yeah. And I mean, we talk a lot about Genius, and we're going to be talking about it a lot today too, but it's obviously changed the conversation in Washington. There's been a huge shift in focus on the stablecoin narrative. Yeah. Everyone wants to launch a stablecoin or get some implemented into their fintech, bank, whatever it may be. How do you think that created momentum then for market structure regulation, though?
Yeah, stablecoin was, we call it kind of one leg of the three-legged stool. Stablecoin legislation, clarity, and then we also have taxes, which is kind of our next.
We always have taxes.
Always have taxes. That's not going away. But I think what clarity proved is that Congress can pass good digital asset-focused legislation. I think there was an assumption for a long time that there wasn't enough knowledge on the Hill, that they wouldn't get there because there was a huge education gap. And what we saw with Genius is they can get it done, and they can pass good legislation. And so it really is driving the momentum for clarity. I think people it added some trust to the process. So I think this whole year past Genius has really been driving us to this moment with clarity.
So where do we stand with clarity? I know we were talking about it off stage, and I was like, how do I even ask this question of where are we?
Where are we?
Yeah, what's going on? I feel like every single day, every time I refresh my feed, there's something new going on.
Yeah, and it is, and you get different stories from different people. We've had our members on the Hill with us. We've been in, I think after today, we will have met with 13 senators, but in 35 offices in the last 3 days overall. And I think what we're finding is, they are very close on the main part of the language. The Senate banking bill and the Senate agriculture bill are going through the process of being combined. There's just a few little nits that they're still working out, but for the most part, staff feels good that they've gotten to a place where there's some agreement. And ethics is the big elephant in the room, right? That's what we hear from every office is that it's, we've got to figure out ethics. Today, there's a meeting at the White House with some Republican senators that, we're hopeful that an agreement comes out of that and that it's something the Democrats will accept or that they can, make some changes but get to an agreement. What I've been saying in all these meetings is the biggest tragedy here would be to lose all this great work on clarity because they couldn't get to the perfect agreement on ethics. And so that really is kind of the linchpin right now. I'm hopeful. I think the right conversations are happening with the right people. So I think we can get there. And then once that agreement is done, they're going to move fast. I think, there's some recognition that these agreements are a little bit fragile, and you can't just let them hang out there for a long time. So if they get ethics, they get that language, they'll put the language out, and they will probably schedule a vote shortly thereafter. So I wouldn't be surprised if there's a vote early next week. And it'll be a motion to proceed, and it'll be a cloture vote on the motion to proceed. It's a procedural vote, but it does need 60 votes, so that's really going to be the test. And I don't know if we will have a good idea until that vote starts as to the outcome of the vote.
Where do you stand on the ethics provision? Because I know there's two sides to the coin,
Yeah.
right? And people are going back and forth. And maybe for context, we could explain what's going on there too. And I think later today we'll see where things land. But yeah, it's definitely a hot topic.
It's a hot topic, and for my members, and what we are advocating for on the Hill is like, look, whatever you decide on ethics, that's really not our concern. That is politics. That's Congress, that's the elected officials, but please don't let it kill all the hard work that we put in the rest of the bill. Don't let it take down this important bill that creates this framework, because we need to be leaders in this space, and the only way to do that is to get a federal framework in place. Other countries are waiting for us. This is our moment, this is our chance, and so that's really been our argument, is like, do what you need to do, but please don't let that kill what we have done so far, and how far we've come, and how hard senators and staff and House members have worked on this legislation for a lot of years.
Right. And then I know there have been some maybe changes to the text. What would you say are like the biggest additions right now, or changes that you're most encouraged by?
Yeah, there have been some discussion around, we saw some law enforcement groups come out against the BRCA, which is the Blockchain Regulatory Certainty Act. I think there was some discussion of, do you change that language, which we were very much opposed to. My understanding is that there's probably going to be some new resources for law enforcement that might be part of this bill. That's really helpful, that kind of helps nullify that argument, because those are very plugged-in constituents with these offices. And so a lot of members have said to us, I need my law enforcement okay with this. And I think a lot of it is getting them additional resources. There's been some just kind of changes around the edges in the Senate Agriculture draft from where the House was, but it's not terribly different. And banking, they had to do a few things to get a bipartisan markup. I don't expect a lot of change at all in the banking committee. And I actually think the yield deal will hold too. I don't expect any changes to yield. I think it's going to go forward with the Tillerson-Also-Brooks compromise.
The yield deal will go forward. Is this going to make Coinbase happy or not happy? In what capacity?
Yeah, what I've said to everyone, when we talk about the yield agreement, it's crypto did not win. This was not a win for crypto. Certainly we didn't lose to the banks, but we gave up. We went in good faith, and we were there recognizing that you got to give something in a negotiation, and crypto gave a lot. So to have the banks turn around and not acknowledge that agreement after it was done was really frustrating, because of how much we had conceded to get that agreement. So I'm really pleased to hear that that's the plan, is to go forward with the current agreement between Tillerson-Also-Brooks, because that was heavily negotiated. A lot of people had to give up a lot to get there, and it would be a shame to reopen that negotiation when crypto showed up in good faith.
In general, where do the banks stand with the crypto industry, and obviously clarity in mind? I'm sure you're talking to some of them. Yeah. Is it blown out of proportion the way it's portrayed in the media, which... I'm part of that, but I'm not blowing it out of proportion. But I know, there are people out there that are really, writing about it. I saw a report from The Information yesterday that said, Coinbase and JP Morgan Chase usually have partnerships, but apparently they're, pulling back on some of them. Obviously, the rift between Brian from Coinbase and then Jamie Dimon from JP Morgan Chase is public. People have seen that in the past, but... Do you think it's actually blown out of proportion and that banks are on board with this in general, or that they are kind of not very happy?
I think banks see the promise in the technology, They recognize that this is an upgrade to our financial services system, an upgrade that's desperately needed. And so that piece of it is, I think overblown, because eventually, blockchain will be part of everyday banking for all of us. The technology is that good, and that, kind of changing the way the markets work. So I do think sometimes the competition aspect is overblown. I think the banks kind of elevated it with the yield debate. They really made this kind of a crypto against community banks, which is unfortunate, because in no world do I see some reason that crypto would take over a community bank. I said my mom worked at a community bank. My dad's a farmer. He has all his finances at a community bank. It's also where he gets his operational loan. There's no way he's going to move his money to stablecoins. So I think the banks really kind of blew that argument out of proportion, and it really has given this feel of it's banks versus crypto. But at the end of the day, we're going to be partners. That's how this is going to work out. So a lot of it is Washington theater, I think.
You didn't sell your dad on stablecoins?
No.
We got to bring him to this conference.
They're starting to get some Bitcoin miners in my home county. And when the first one was built, my dad's like, I don't know what they think they're going to find under that land. There's nothing to mine.
Oh, there's Bitcoin down there.
I was like, I don't even know how to start with this. So that's his level of understanding.
That's fair enough, fair enough. All right, well, we'll send him a stable coin. I'll send him one on me. I want to ask, on a level of, let's say, 1 to 10, how confident are you that Clarity will pass?
Yeah, it depends on the day. We had great meetings with a number of senators and staff yesterday, Democrat and Republican. People want to get to yes. They want to support this bill. The kind of political discussion that you hear where it's, now this ethics fight, they want that issue solved so they can support this. So I'm at 8.5, 9, and I don't know if that'll change until the vote starts. And honestly, I think it's going to be interesting. If they're comfortable with the ethics deal, I think we might have a big vote. If they're not, it may be a partisan vote. Mm-hmm. And we just won't know until that vote has started, I think.
Is there a timeline for this?
I think early next week. I think that they recognize that certainly they have 3 weeks left in the Senate session. If there's any hope of getting this back over to the House, I think they want to move quickly. So I could see a procedural vote early next week, but some of it is can they hammer out some of these language questions that they have to actually get this bill released, because senators need a little bit of time to read it, to digest it. So that's an important kind of next step, is to have that text released.
Yeah. I know you've also described Clarity as more than just an industry bill. It's not just for crypto, but the broader U.S. economy and financial system. Can you kind of walk us through why that's so important? And then for people outside of crypto, what this legislation would mean for those markets?
Yeah. A lot of it is just kind of what it would unlock in the United States. There'd be more investment. Developers would be here developing. We'd have, the innovation that comes with this space would be happening here in the U.S. And these are job creators. I mean, these are small businesses are creating jobs, so it's really important to the economy. I think the other side of that is, if we don't lead, we're going to cede that to somebody else. And who's going to pick up that, kind of ball and run with it? I don't think it's going to be someone we want to see leading the space. So it's critically important, even from a national security standpoint, that we have a federal framework so that this industry can thrive and grow here in the United States. I think the other piece to this that people don't talk enough about are the consumer protections involved. They don't exist without this bill. The disclosures, the segregation of funds, having an entity be examined by regulators and ensuring that the funds are where they need to be, that's missing right now. You have state regulators who are ill-equipped, not saying anything bad about it. I think they would admit they're ill-equipped as well. Ill-equipped, underfunded, and they're supposed to be the ones regulating these big exchanges. Just is not going to work long term. So it's really important that they have this federal framework so that, again, money transmitter license were not made for crypto. We need federal regulation that is made for crypto.
Yeah. So not to be doom and gloom, because we're gonna keep having fun up here. But like, what would ultimately happen if clarity doesn't go through? Is there a chance for a second act? No pun intended. Or like, what do we do?
Yeah, I mean, there's been a number of setbacks throughout this process. What I've been impressed with is like how engaged and positive the industry has continued to be, even with those setbacks. So, should this vote fail, I don't think that's the end of it, because again, this has to happen. So, I think we'll go into kind of another probably period of negotiation. It will get a little complicated with the elections coming up, but certainly as an industry, we're not going to let this die. I also think, as Congress is maybe not, if they're not acting in this space, what you'll see are the regulators really stepping up and offering a little bit more, using the authorities that they have to try to create a framework. It will not be as thorough or as kind of durable as legislation, but they will do what they can to try to provide some regulatory clarity in this space. So it really will kind of, we'll keep working on clarity on the Hill, but there will be kind of a refocus on the CFTC and the SEC and Treasury and others to kind of see what they can do through the regulatory route.
Yeah. I also wanted to ask you about one of the more discussed pieces in the bill too, which was the Blockchain Regulatory Certainty Act, or BRCA. From your perspective, why are developer protections so important to get right? And what problems are pieces like BRCA solving? Maybe some context there for people who don't know what that is.
Yeah. What's interesting about BRCA is it's really how things should work. And under this administration, it is how things are working, which is if you're developing code, if you're putting out code, you're not custodying funds, you're not a centralized entity, there's no reason that somehow a criminal statute would impact you, or really any regulatory statute. You're just creating code. You're not handling people's funds. You're not directing any kind of activity. And so having those developer protections are critical. I think what we will see if we don't have BRCA is this will all be developed offshore. And what people don't think about with that is, you talk about law enforcement. If you have this developed here on shore, the industry wants to partner with law enforcement. They want to help them. And so having the developers here, being able to go to the developers and say, we see this protocol being used in this way, help us understand, what you developed and what, how they're using this. Those conversations won't happen if this is all being developed offshore. So it's really important that we get those protections in place to make sure that development happens here in the United States. And it's both, national security, law enforcement. There's just a lot of reasons that we want to protect developers in this space. And, we go back to the internet, people were creating the internet, nobody was going after. Yeah, there's all kinds of things going on there, but you don't necessarily hold, the developers liable for what
that,
people are doing on the internet.
Yeah, I mean it's a conversation I've had a lot too, where it's like if someone creates a technology and then someone goes and uses that technology for bad, are they held responsible? Yeah. No, I would argue, because they weren't the ones who were doing the bad things, right? But then the argument is that this developer protections could create some loopholes, right? So how do you reply to that then?
Well, what I usually start with is, like just going back to the simplest kind of look at this, and I always say, like, what if the government, came down on Ford because Bonnie and Clyde used a Ford to commit all their crimes, right?
That would be fair.
That would have, it's stifle the innovation. We wouldn't be driving the cars we have now. And I think we've got to look at it the same way, which is like if we come down on these developers for actions that criminals are making, it's just going to slow down the innovation. So, I think to your point, you need to remember that, if there's a crime committed, a crime is still committed. It's just who are you going to hold accountable? You should hold accountable the criminal. There's no loophole here. That is the case now. That'll be the case going forward. If someone misuses a protocol for criminal activity or inappropriate activity, that individual is liable for their actions.
Right.
But it should not be the developer.
Yeah. I mean, to that point about crime, there's been a lot of discussion about law enforcement concerns. How does the current version of the Clarity Act actually kind of strengthen the law enforcement's ability to combat illicit finance, and then also to that point, like allow innovation to prosper?
Yeah. A lot of it is just having this federal framework, having this in a regulated space that changes a lot of oversight. Having a regulator that's looking for activities that are not permissible, being able to flag those for law enforcement. That's critical. There's some language in here around Bitcoin ATMs, which has been a concern for law enforcement. So this legislation addresses that. I think there's a lot of public-private partnerships that can occur in this industry with law enforcement that's just not occurring now. And it's a combination of not having that kind of federal framework where it brings everything together. But there's also a bit of, PSDD from the industry, and they don't know if they can trust. They're not going to go forward with everything if they're like, well, we don't know if we're going to be held accountable. This kind of goes back to the BRCA too. A developer might not come forward and say somebody's misusing my protocol if the fear is they're going to get charged. So I think it opens the door to a lot of public-private partnerships. It definitely creates laws where they don't exist. And it's that kind of certainty where that there is a regulator looking at this activity, and they're going to catch something and be able to work with law enforcement if it is something that needs law enforcement's involvement.
How do you think about building more trust in this space when we just get these unfortunate sporadic DeFi exploits that kind of set things back, so for lack of better words?
Well, I think, it's in any industry, there are going to be setbacks. There's going to be misuse. It's just the nature of, moving money around the world. What I found interesting about some of these, some of the hacks and some of these concerns with DeFi protocol and tokens being, people taking tokens and stuff, is that it's blockchain. They can trace this. They can get that. They can freeze those accounts. They can recover those funds. If we're talking any other kind of financial, way of moving money, that's not necessarily the case. It's if you're using cash and it goes to an illicit activity, that's gone, and there's no way to trace it. So this is traceable, and so I think being able to demonstrate to lawmakers, to the public, that yes, these things are going to happen, but we can react quickly and we can fix the problem, and at the same time find who was liable and who did the bad, who was the bad actor here. I think that is what's going to prove to the public that we do have the tools in place to make sure that there's some sort of accountability, and that it's not going to bring the whole system down because there's one incident. It's a strong system, and people will figure out ways to continue moving forward after these unfortunate situations.
And it makes me think of consumer protections,
Yes.
which are part of the Clarity Act too. And I think it would provide more protection to everyday users than what already exists,
Yeah.
right?
Yep.
So it's a good thing.
It's a good thing, and I think people forget, it's not just the disclosures that are going to come with a federal framework. I often go to the fact that, having customer funds segregated and having them, remote from a bankruptcy, that does not exist today. That will exist. There will be customer segregation requirements. There will be disclosures about who owns the token, who's, the stakeholders. There's going to be so much more information available to the consumer that just can't possibly be required right now. That this is a consumer protection bill at the end of the day. This is the way you protect consumers. And I've been using, kind of not to go back to FTX because that's kind of a bad memory for everyone. But what I will say is if FTX had been registered with the CFTC as an exchange, none of that would have happened. They would have known where the money was. The customer funds would have been protected. They would have had a lot of oversight. There would have been examinations of the exchange. So preventing another FTX-like incident really does require federal legislation, and that's how you're going to protect consumers. The status quo does not protect consumers.
Yeah. And it's, I think, fair to say that if we do get better consumer protection, then it kind of creates a bigger TAM for the market as well.
Yeah, yep, absolutely.
Yeah. I think, in the crypto space, people have been talking about regulatory uncertainty for years, the enforcement by, how do you say it? What's the line.
Yep, exactly. Regulation through enforcement.
Regulation through enforcement. I always mess this up. But if clarity passes, and we're optimistic,
yes.
We got an 8 or a 9 out of 10, then what's next for regulatory uncertainty in that argument? Is everything certain then, or do we still have things that we need to iron out?
Yeah, not everything will be certain. You'll find areas where things need to be ironed out, but giving that authority to the regulators so they can write rules and they can fix things, it's critical. That's step one. So it's not going to be a perfect law. They might not get the regulations correct the first time. I go back to Dodd-Frank. I still haven't finished all that rulemaking. I was at the CFTC when they were trying to redo there was a position limits rule that came out of Dodd-Frank that they were still trying to get it right in 2019. And that's almost 10 years later. So that's pretty typical. It's not unusual that there's some fine tuning, but you need to give the agencies the ability to do that. And the only way to kind of make sure that they can fine tune the law is by providing the framework through the law.
Yeah. I want to loop back to what we were talking about at the beginning and kind of your 365-day journey on this side of the sphere. You've spent your career at the intersection of regulation, innovation, and now you're vouching for so many different startups, members, et cetera. Are you more optimistic today about America's ability to lead in digital assets than you were, let's say, even a year ago? And if so, why? What's really driving that?
Yeah, when I first started the CFTC, I started in the Office of Legislative Affairs, and it was kind of the first time that there was a bill that was being discussed on the House side. We were working with House Agriculture staff, with CFTC employees, trying to figure out what would be the framework here. And what I found at that point was there was just this huge lack of education. People just didn't understand, and by people I mean Congress. They did not understand what this technology was, why it was important, what it meant for the United States and the economy. And as a commissioner, I would do briefings for members, and I remember the first one that I did, there were a lot of questions of why do we need this? Why is this legal? Why are we even doing this? And as time went on and I did more of those briefings, the tune changed. They got it. They understood it. They understood the opportunity here for the United States. And seeing that evolution, it's really positive. And honestly, now when we go into some of these offices, the technical questions we get it's just crazy how far they've come. And so that makes me really optimistic that, we have become part of the mainstream. That we will be an important part of the economy, and that's recognized by lawmakers and regulators and politicians now.
Can you give us any insight to any recent conversations you've had that would spread some optimism in this room?
Yeah, we've met with a couple of Democrat senators this week, more than a couple. We've had a lot of meetings, but what I'm finding is they want to get to yes. they don't want to vote against this bill. And so that makes me very optimistic. It's not, they're not looking at it as like, this is a Republican bill and we're not going to support it. They view it as, this is our bill. We've been involved. Our staff has been involved. We've all been working on this. This is our bill, and we want to be for it. And that's why I'm kind of at a 9, because, you know, people have worked really, really hard on this, and to let that work, you know, kind of fall away because of, you know, 1 or 2 issues would be really unfortunate. So I think that's been probably the most promising thing, is this idea of like, this is a bill that both sides have worked on, they've created, been working a long time on it, and this is, you know, this isn't a partisan bill.
I love that. Okay. As you look to your second year as CEO of BA, what are priorities for you? Obviously, clarity involved, but maybe aside from clarity too.
Yeah, the third leg of the stool, taxes. We've got to reform the tax system.
I always forget about taxes.
Yes, I always forget about taxes. But I mean, that's talk about like how far the industry has come. You have House Ways and Means debating crypto tax as we speak, and you have the Senate focused on crypto legislation. To have both sides of Congress looking at legislation that will kind of unlock this industry is really notable when you think about, you know, 5-6 years ago, they were like, why do we even need this? So it just shows you how far the industry has come. And so taxes is a big one. You know, assuming we get clarity, making sure those regulations reflect stakeholder engagement, that they are done in a way that recognizes that, you know, this should be a cooperative process with industry. And, you know, writing rules takes a long time. Fine-tuning the rules takes a long time. So that will definitely eat up a lot of the next year. But, you know, I think there's probably other things that are going to come online that we don't even know yet. There are going to be other issues. You know, a good example right now is the Illinois digital asset tax. It kind of came out of nowhere, but we got to do something. And so I think there are going to be, you know, things like that pop up, especially in the state level. So we still have a lot of fights to fight.
Yeah, I was going to ask on the tax side, you brought up Illinois, and I was thinking about that because we've talked about that recently on Crypto in America too, but it's like, is that going to be common where we start to see state level, I guess, provisions popping up? I don't know if that's the word you would use, but like state level enforcement or like different things for taxes on this front.
Yeah, and I think that could be the case if crypto doesn't come out strong in this particular against Illinois' law. We have to be a strong force. We've got to show that we're all together in this, and, you know, make sure they understand that you can't do that. You can't, you know, put a tax on an industry specific. You know, it's unfair. It's targeting, you know, an industry versus, you know, something that taxes should focus on, which is, you know, kind of the getting public money in the door. This is very much a politically directed tax. And so the hope is that if we can be a united industry and really push back on this, that will maybe keep some of the other states who think they could do this, let them, you know, they'll see that we're not going to sit by and let this happen. But I could see other states, you know, looking at opportunities. It's kind of like anywhere there's money, government's going to try to tax it. So it's not surprising.
100%. All right, finally, Summer, if you can take your crystal ball out and look to the future, let's say a year down the line, where do you ultimately want us to be? Because I think a year is a long time in this space.
It's a long time.
Yes.
Yeah, I've been with the Blockchain Association for a year, and it's felt like, you know,
a lifetime.
5. Yes.
And in a good way.
Yes, in a good way. In a good way. Yeah, things move quickly in this space. And, you know, and we want it to move quickly. We don't want to stifle that. But yeah, looking at the crystal ball, again, I just see blockchain being part of the financial system. I see this as not, you know, crypto versus banks. I see this as, you know, this is giving consumers better options to be in the space, giving consumers options to move money faster, to access bank-like products that they might not have access to now. I think we're gonna fill a lot of gaps in the current system. And I really look at this as, going forward, it's not gonna be crypto versus banks, but it's going to be the financial service, the upgraded and, better financial system that America's leading on.
I love it. Amazing. Well, Summer, thank you so much for taking the time.
Yeah, thanks for having me.
Yes, and thank you to everyone for listening in.
Yes, thank you, Injective.
Where did Summer go? She's still here? It's on the door. Summer, Polymarket has clarity passing odds at 40%, so you have a good opportunity to turn $1 into $2 if you think it's at 90. Well, thanks so much, guys. We have another panel. We're going to pivot, shift gears a little bit from regulatory landscape to institutions and how they're gate crashing the crypto world. I'll invite my panelists up to join me, and we can dive right into it. Since I've been covering this space, the question of when the institutions are going to arrive, start building in this industry has been top of mind, and it seems like we finally reached that stage. So we'll kick things off by just doing quick introductions. Remember, there's a difference between introducing yourself and pontificating ad nauseum, so we'll keep them tight. I'm Frank Chaparro, head of special projects and content at market making firm GSR. And don't hold this against me, I also host a podcast, which most men of my demographic profile do. But we'll let the ladies speak for this session.
Hi, everyone. Kathleen, Wrynn, Global Head of Digital Assets at Invesco. Been with the firm about a year now. We created a dedicated digital assets team a year ago when I joined, really to take all of our efforts to make it much more scalable.
Hi, everyone. I'm Krista Lynch. I lead capital markets and trading at Grayscale, and I work primarily with our authorized participants, ETF market makers, and crypto liquidity providers.
Hi, everyone. I'm Katrina Paglia, the Chief Legal and Compliance Officer for Pantera Capital, a blockchain exclusively focused venture capital fund. And I know I'm not supposed to pontificate, but I love that this is like a female panel. I just have to throw that out there. This is amazing.
Yes,
That is pretty amazing.
Agree. Very amazing.
Yes, thank you.
And last time I saw Frank was at a female-focused summit as well, so very excited.
Jacqueline, do you want to just swap in for me right now?
No pressure.
Well, no, this is fantastic. Good representation. So let's set the stage, right? Because crypto has been stuck in the doldrums for the better part of the last 10 months since the infamous 1010 sent our markets and our capital markets into a tailspin. But juxtaposed with that, right, have been nonstop headlines, nonstop developments out of the storied institutions of Wall Street, from New York Stock Exchange to BlackRock. We almost get a new update every day, right, from BlackRock purchasing some Uniswap. These are headlines that, if you would have told me even 2 years ago were in the realm of possibility, I would have called you crazy, Kathleen. and I would have had no problem doing so. So how do you think through that juxtaposition? What is the state of crypto right now?
Yeah, what we were saying is that this crypto kind of winter since October really has kind of been institutional summer in a lot of ways. The institutional adoption that's been taking place, especially since the start of the year, has been absolutely incredible. We publish just a daily feed on all news internally, and my team was just so shocked yesterday alone how many institutional announcements there were globally as well. It's really incredible how much traction we're getting. I think that's really because, historically, especially within asset management, the crypto focus has really been around how can we get digital assets exposure into portfolio constructions, which is absolutely still critical. But I think the big unlock as well over the past year has been, this is a structural shift in how we operate as asset managers going forward. And with that, tokenization rails really unlock a lot more opportunities. And that's been a lot of the focus recently.
Krista, what's behind the shift, right? I mean, part of it might be regulatory. Even though we don't have clarity, it does seem like institutions are comfortable operating in this market.
Yeah, we spend a lot of time on education, and that takes a lot of time in and of itself. So some of these institutions, we've started the conversation with them years ago about how they can invest in Bitcoin, why they should invest in Bitcoin. And now, as overwhelmingly a lot of their clients are demanding access to Bitcoin, they're realizing that they really have to be able to provide that access to their clients. So I think seeing some of it manifest now is not necessarily out of the blue. It's conversations that have been going on for many months, in some cases years. And just a couple examples of some of the ways that we've been trying to help educate them. We actually go around the country and host a series called Crypto Connect, where we go to different cities of interest and host half-day seminars as a way for advisors and other institutional professionals to understand what's available to them, what's available to their clients. We've launched other educational resources on our website, like the Stack that our head of research posts on a nearly weekly basis. And those have been some really popular resources for those who are trying to get up to speed with crypto. Again, taking many months, in some cases years, and now starting to see that really come to fruition.
Katrina?
Yeah, I mean, from our perspective, we're seeing a lot of institutions willing to have the conversations about allocations to a crypto-only venture capital fund. Actually, literally just yesterday, we launched as the first digital asset fund on a large bank from a private wealth management perspective, and that's huge, right? Like, this is the first that this large bank is willing to offer to their private wealth clients. So that was a really big milestone for us. In addition, kind of looking at the portfolio, I think we're seeing IPOs of a lot of our portcos that are crypto focused, which is a really great sign that the capital markets more broadly are opening up to them. And then the other, I think, big unlock we saw probably a year and a half ago at this point was the approval of the ETFs. The Bitcoin ETF, which now everybody's very aware of, was a very big thing. We seeded one of them, and it was a big rush to the finish line with a lot of comments with the SEC to get everybody moving at the same time. And that was a really big unlock from a retail perspective of, hey, you can have access to Bitcoin, you can have all the transparency, you can have all the reporting of these 40 Act funds without having to go and actually open a wallet. And that, we think about this, there's a lot of people that still don't have wallets. Like, my mother will never have a Coinbase wallet, but she can buy into that ETF now and get access to that. So the ETFs, I think, were a big unlock, and we've continued to see the evolution of that over the last 18 or so months.
So that's interesting. So you would say the ETF was one of the bigger catalysts. And it's not just access, right? There's also tax advantages to investing in crypto via an ETF.
Yeah.
SEPs, IRAs, those types of vehicles, you can't buy direct spot crypto.
Right, and I mean, another kind of to your point, IRA rings the bell of 401k, right? Like, Fidelity now offers a Bitcoin option in their 401k. And again, this gives consumers who maybe aren't as crypto comfortable access to just get a little bit of an allocation to our asset class.
I've noticed over the past, let's call it, 6 to 12 months, most firms on the street, through either their asset management arm or their research departments, have put out some, form of a allocation recommendation. Do you have a sense of what maybe the street consensus is for how much should you put, how much crypto should be in your portfolio, and what's the role in that portfolio construction?
I think it really ranges based on where the particular investor is in their journey.
I've seen up to 7%.
I think I love 7%. I think that
This
might
guy
be a
has
little high for
100%,
some. But again, it really depends on where the investor is. We work with investors who are just learning what Bitcoin is, and then we work with investors who are ready to go into individual protocols much farther down the capital stack. I think one other point on the ETFs, and something that I think has been really interesting, is it's broadened the horizons not only for investors who didn't have wallets, were hesitant to open wallets, but we're also seeing a lot of investment in holders that have native token, and they're able to access things like we talked about, putting their token into an IRA, putting their token into an account with tax succession planning, and other U.S. broker-dealer features that they would expect on their accounts. And I think that has really driven a lot of investment from a different type of user into the ETFs as well for that kind of access theme.
Yeah, I completely agree. I think that meeting with clients, especially in the U.S., such a wide range of understanding and where they want to access, and with the ETP wrapper, really allows for you to be able to kind of take away all the on-chain friction, having to manage a wallet, and really have in a very accessible and familiar way to gain that access.
You also have both sides of finance, the crypto side and the traditional financial services side, what we call TradFi, kind of converging, right? Where crypto assets are being wrapped in ETFs, but at the same time, there's a lot of talk about how we can leverage the crypto and blockchain technology to wrap equities in ETFs via tokenized equities and vaults. Where is the momentum right now?
I think there's incredible momentum across the board. Just from our view, we are very big on partnerships as a firm, and so we believe in really taking the best from the digitally native community providers and partnering with them as we deliver products. So in the U.S., since we're here, we partner with Galaxy Digital on all of our crypto ETPs, and it's been an incredible partnership for 5 years, really to take that digitally native expertise with our traditional asset management background. The same with tokenized products, partnering with Superstate on several products as well there going forward. When it comes to what's to come, I think yesterday was a very exciting event that DTCC held. It was one of the largest tokenization production events that took place. We were excited that our Invesco QQ product was the first product that was part of the equity token transfer use case. But there were 7 different use cases, over 30 different companies part of it, and really very many asset classes. So really exciting the traction that's being made currently.
We're seeing a lot of interest in the U.S. Treasuries being tokenized. So I think Ondo might have been one of the first ones to do it. And if you think about what that means, it's 24/7. The settlement's relatively immediate. You have access to Treasuries. That's just the U.S. Treasuries, and I think that's going to expand, and other countries have kind of done the same thing. But the speed, the efficiency, the comfort you have that you're getting this thing immediately and you can do it whenever you want to, and kind of just extrapolating on that a little bit, if you think about the fact that crypto is 24/7, I think as investment advisors and fiduciaries, we need to be thinking about what our obligation is now that we're kind of trading outside of just the traditional NYSE and NASDAQ stock market. So the 24/7 access to this asset class, whether it's tokenized treasuries, digital assets, Bitcoin, I think is something that we all need to be thinking about in terms of how we should be managing our portfolio and our liquidity. Because if you're not around the computer 24/7, something changes, you're going to miss out. And that's a difficult thing to manage from a legal and compliance perspective.
And the points on convergence, I think we actually did a survey with the Harris poll, which is a think tank, to understand where a lot of young investors have their first trading experience, and it's often with digital assets. So I think that really pushes traditional providers to offer features like 24/7 trading, the ability to settle instantaneously, the ability to get your cash out of your account immediately. And that's really going to require digital rails. So if you think back to like 2 to 3 years ago when people were talking about what is the value of tokenizing cash in a stablecoin, I think a lot of traditional providers were like, this is kind of boring, why do we need this? But now we see so many use cases for it. We see it implemented by big banks. We see it implemented in real value-add ways. And I think that the conversation for tokenization is going to progress very quickly for similar reasons, because it can offer those crypto-native features that young investors really demand and require.
The market's just so different as well. I feel like a huge catalyst for tokenization and the perpification, if you will, of the market has been tied to the fact that so many things happen off hours. The president might decide Saturday night at 2 a.m. that he wants to implement some sort of tariff on the Strait of Hormuz or not. And so you need to be active because the markets are changing at times when they normally wouldn't be. How much of how does the market structure though work for that? If you sort of have different wrappers, different products, where's sort of liquidity going to be centralized, and how do you navigate, what could be a bifurcation of liquidity?
So here, I think, to me, I look at things like perpetual futures, where we're seeing a lot of activity gravitate because they are available on a 24/7 basis. But until recently, were not available in the U.S. But we do see some of the U.S. providers, I would say, entering the conversation, whether that's in support of hosting similar features, similar products, or if it's potentially to help create the legislation around how they can come to US markets. So I do think that there's going to be this theme of convergence again. You see demand for certain features and some venues that are able to offer it, and then you see other incumbents who enter the conversation, whether that's because they feel threatened by these new vehicles or because they think that they can build a better mousetrap. But what ends up happening is convergence, where I think that these will be hosted in all of the venues, whether that's crypto native or traditional, but it will take time to get there.
Any thoughts?
Yeah, no, I absolutely agree. I think that it's going to be an evolution over time. I think that we really need to create more use cases to want to create more tokenized products. I think when it comes to the adoption we've seen, or private market fit stablecoins have gotten, tokenized money market funds have clear use case. But when it comes to other areas, we need to create more utility, and with that comes the need to integrate more with more decentralized protocols and other opportunities. And that's where regulatory clarity is absolutely critical, to have clear rules of the road on how we can interact.
What are the biggest impediments to those integrations from the perspective of a firm like Invesco?
I think that we can operate in a gray area. We believe in responsible innovation. I think that the hacks that have taken, I think Jack was mentioning it in the past panel, the hacks that have happened this year in DeFi protocols is very concerning. I think historically, is very much kind of like when it comes to collaboration, the asset manager wasn't as involved. That would have to change going forward to have meaningful size and scalability. So thinking of what happened with the crypto winter in 2022, that was really the test for us to move from more private permissioned networks. We were constantly having conversations of private versus public. Now most large institutions operate on public blockchains, not a question. The crypto winter in right now is really, I think, that test for decentralized finance protocol. So how can we collaborate together with DeFi native players to find these use cases, to create institutional-grade solutions to manage sizable assets on these decentralized rails?
I think it's often surprising that crypto practitioners want more rules and regulations, of course within reason, but they really do provide guardrails for us to know where we can invest in a way that will be permanent. And a new administration won't wipe away all the work and investment that we've done in a particular build. So I think things like the Clarity Act, we're very optimistic about them, about the permanence that they can bring, and about the certainty that they would allow us to build with confidence new applications that we know will be evergreen. I think in the absence of having those guardrails, it can be very difficult to hone in on specific things to focus on, because there's so many different combinations and permutations on the chessboard, and it's constantly evolving.
Yeah, and kind of from the VC side of the house, when it comes to clarity and understanding the rules of the road, we saw a pretty big shift outside of the U.S. from a development perspective over the last, prior administration, right? Like our portcos were coming to us saying, how do I not get subject to the SEC? How do I stay out of certain states where their money transmitter licenses are a little bit more aggressive? How do I avoid being sent subpoenas that, as a startup, as an early stage company, you don't have the resources to manage? So I think what we've seen since the new administration has come in, and the new SEC and CFTC have come in, and the collaboration and the communication with the industry has been light years different from what we had seen previously. The building and the development and the innovation is coming back to the US. It's coming back here. It's combining with AI. It's combining with robotics. The capital is here. People want to develop in the US. They want their companies to be here. So we're seeing a big uptick in companies and our portfolio companies, and even the folks that we're looking to invest in now in the new fund, really wanting to be in this country. And I think that's where we want to be, right? We want to be competitive. We want to beat China. We want to beat Europe. And I think that's the US mentality and the administration and both sides of the aisle that we are seeing, as Summer was just talking about. they both really want this bill to pass, and I think it's just a huge unlock for bringing a bunch of capital and a bunch of innovation back here. And we are seeing it just from all the companies that we're talking to regularly.
There's been an increase in the portfolio in American founders.
The conversations are significantly more positive. I don't know the data, but it has pivoted more towards here. Or it's not even like American founders, it's founders who are willing to have a presence in the US now as well. Like they're willing to hire in the US.
Without fear of reprisal.
Yeah, exactly.
But not France. You guys know about France, right? Don't want to be a crypto founder there. There's a lot of like wrench attacks, get your fingers chopped off. It's terrible. No, seriously. What were you going to say?
News to me. That sounds terrible.
No, it's really bad.
And I love Paris, so that's awful.
Yeah, because the IRS there, or their version of the IRS, has been infiltrated, and they give out, addresses to different crypto founders and crypto investors. Opposite environment here.
Yeah.
I mean, I will say the collaboration between France and Germany, though, on kind of propelling digital assets is very exciting right now. They're kind of coming together to make things more scalable.
Good to juxtapose that with something positive.
But definitely the kidnappings are a concern. And just to add to that point as well, I spent spending the day on the Hill yesterday. Really exciting to see the engagement from representatives. So I think really exciting from a U.S. perspective. Lots to come.
Yeah, I mean, to echo Summer's points about how far we've come from the perspective of regulators being engaged with this industry. At this event, we have in the next session 4 Congress people joining us on stage. We have we have some comments from Senator Kirsten Gillibrand later today. This is just a completely different environment. And not only are they engaged with digital assets, but they understand digital assets and their importance in the American economy.
Yeah, I think the regulators are making a pointed effort to hire crypto native or crypto focused people in the various divisions. I mean, one of the issues from the RIA perspective is a custody rule. It's a constant struggle, qualified custodian, where do you actually put these assets to be secure? And the rule as drafted is maybe not the most fit for purpose rule. I've been on calls with the SEC where you have folks from like audit, exam, enforcement, policy, economics, and there's more of them than there are of us, and they're just like, okay, explain to me why you can't just put this thing at Coinbase. And we're like, well, Coinbase can't just turn it on, and there's engineering, and there's coding, and there's prioritization, and they really are asking us for information and trying to fill the void either through non-enforcement letters or rulemaking or what have you. So the engagement, the collaboration is so incredibly positive right now, and not to go too far in the positive direction, but we feel really good about the engagement between all of them. And the collaboration between the SEC and the CFTC is really special. And you see them partnering, you see them doing joint sandboxes and joint issuances, and that's what you want. You don't want a turf war, because that's not good for anybody. And the new folks kind of at the top of both of those agencies really are making us feel positive about it.
I would echo that. Being at Grayscale before the Bitcoin ETFs came to market, and we were, of course, the ones that brought the lawsuit to bring them to market, those engagements pre-ETF under the prior administration sometimes felt like talking to a wall. There weren't a lot of two-way dialogues. We would, of course, have our arguments and our cases, and we would be looking to engage, but it just wasn't really received in a conversational manner. But now, under this administration, I've been to the crypto task force twice. They're very engaged. Not only do they want to build the rules of the road, but they also want to thoroughly understand. And I think that's very refreshing to have regulators who want to work collaboratively. They want to ask questions. They want to really understand the subject matter of what they're helping to administrate. And the welcome reception that they give for people to come in, speak with them, meet with them, speak to them about various topics, illuminate things to them, I think is just a total 180.
Yeah, I mean, it's not just a difference in engaged and disengaged. It's between antagonistic and collaborative. I mean, the arguments against a Bitcoin ETF coming to market under the last regime were capricious. I mean,
arbitrary and capricious, we like to say.
It was insane to argue that the Bitcoin market wasn't of sufficient size to warrant funds on top of these assets just made zero sense. And I think, now and that's why, most of the activity had been onshore. If you think about exchange volumes, for instance, 80% of crypto trading volumes are still offshore. Do you see that shifting?
Yeah, I think things like the ETFs obviously open up U.S. investment. Perpetual futures are another interesting area to look at where they've traditionally not been offered in U.S. markets, but we're now starting to see some regulatory conversations around how exchanges here could potentially offer them. So I think that that's another area that you might start to see convergence. Again, you might start to see things shift from being uniquely overseas to potentially more in the U.S. And I think that that's really exciting, and I think that it's kind of what we need.
I absolutely agree. I think that also all the progress in the U.S. is also helping to propel other jurisdictions to also take meaningful strides. So I was in Europe last week, Asia the week before. Really exciting, all the traction that's being engaged globally around the digital asset ecosystem. Thinking of yesterday in Japan, launching crypto regulation. The FCA the week prior with a lot of the work they're doing to have the books and records of a tokenized product be the onchain books and records. These are things that's needed to help propel us across the digital asset ecosystem globally.
Kathleen, you must be, platinum with United. You're traveling all over the place.
I don't use United, but Delta, yeah.
Delta, okay. I'm
But really excited in the traction.
United guy. With the sort of, all the developments that we're seeing with institutions adopting crypto, it doesn't seem, or at least it hasn't seemed like that has accrued to the tokens themselves. I'm curious about the conversations you might be having with institutional allocators. Are they scratching their head right now because they're seeing the headlines about what's happening with institutional adoption, and yet their coins are not doing well, to say the least?
I'm happy to start with that one. So I think a lot of our institutional conversations focus on Bitcoin. And of course, there are some who are ready to branch out beyond that. But Bitcoin, for many, we live in our echo chamber being crypto natives and crypto enthusiasts, but many are really still at the stage of what is Bitcoin. So I think that there's kind of two separate tracks to the conversation. One is initial education, which will probably focus on Bitcoin and the digital asset kind of thesis of blockchain technology. And then, of course, there are individual tokens. So we've been excited about the opportunity to launch individual tokens beyond Bitcoin and Ethereum through rules and regulations like the generic listing standards that came out last summer. That's a framework for how different tokens beyond Bitcoin and Ethereum can become ETF eligible. And we've been able to bring 9 different exposures to market in single token form as a result of that. Now, some of them are seeing appreciation, like Hyperliquid, for example. We've been talking about perpetual futures. Hyperliquid is really the biggest venue for trading those on a decentralized exchange. And we have seen correlation between the use case with the trading of perpetual futures on the DEX and the token itself. But I think many of the institutions that we're talking to, if they're still asking what is Bitcoin, they're not yet ready for Hyperliquid, but we will get there. And other tools that make it more accessible for them to invest broadly are index funds. I think that could be another potential area of focus in the coming months as we see more and more tokens available in this accessible format. Potentially those investors that are really at the beginning of their crypto journey might be overwhelmed, but an index product is a way for them to invest broadly in digital assets without picking tokens individually themselves.
I think in addition to all the access points that Krista made, which are fantastic, I think, and the generic listing standards are now allowing us to create more complex products. Also, the product features we can enable as well. So thinking of, Solana, Ethereum, the ability to add staking as well is a great new feature to add more potential yield opportunity for products.
Yeah, I think institutions benchmark against Bitcoin, right? So any asset that is not outperforming Bitcoin, any token that is not outperforming Bitcoin, they're not going to have much interest in. So it's hard. It's a bet, right? If you're going outside of Bitcoin, ETH, Solana, like the big names, you're kind of really making a educated bet on what that, not tail asset, because we're not going to go there, but like something in the middle bucket, right? And I think a lot of institutions aren't super comfortable with that. I think they're used to transparency, they're used to reporting, they're used to things that they are comfortable with. So that is why the ETFs and the products that are kind of put in this framework that they understand are where they're focused versus individual token purchases. Like, it's going to be very hard for them to, one, I think, get it through their investment committee approval to say, hey, we want to launch a liquid token fund, and we're going to put a PM in there, and they're going to pick all the assets. It's going to be Bitcoin, ETH, and then 15 other ones, and it's going to be run like a long short shop. Like, that's going to be a hard thing for them to wrap their heads around for now. I think once we get clarity and there is transparency and there is reporting on some of these things, and they know CFTC is regulating them, I think you'll see a lot more comfort in token-specific investments. But until then, for those reasons, I think institutions are hesitant to go beyond kind of like the top 5 or 6.
But that's part of the huge problem that we have in crypto is that you don't have a very robust secondary market, long, short, hedge funds, or those types of players engaging with the assets. You know, barring clarity, is there anything that issuers, we'll call them, can do to sort of engage with that market, right? We've seen some, like Aave, for instance, do something similar to quarterly earnings calls on X. We've seen others represented in research reports from investment banks like Standard Chartered. Is there anything that the token community, if you could give them some advice to engage with the liquid side of the market?
I think everything you just said is right. I think the more you can look like a public company from a reporting perspective will help, right? So the early stage stuff that we're investing in, the sophistication isn't there, the track record isn't there, the financials are just not anything that's going to be super attractive to the institutions until they get further down in their series rounds and launch that token. So the Aaves of the world, I said Ondo before, but once you get to the more sophisticated maturity level, then you can actually produce the materials that the institutions will like, and then using the channels that they're familiar with, the quarterly reporting, whether it's on X or you do a LinkedIn thing, or offering your management company for meetings. We do have management meetings. We actually do have a liquid token fund, and our portfolio manager will have what the equivalent of a management meeting is with the founder and the CFO of these companies, and we'll do a fundamental analysis from top down, similar to what you do with Apple. But you have to have the sophistication and the maturity of the product before I think you're going to be able to have those conversations. Earlier than that, you're an early stage VC, and that's a very different conversation.
Yeah, that makes a lot of sense. I feel like with retail sort of being, burnt or, exited from the market, crypto projects have to appeal to institutions in some shape or form.
They have to be something they understand.
Yeah.
So there's a really cool investment or company that we're looking at talking about tokenization use cases. Imagine if you didn't have to KYC every time you go into a new fund. So you can put a token on the blockchain, you verify it once, you can invest in my fund, you can invest in Grayscale, you can invest in whomever, and you don't have to provide all of this information again. It's like pre-check, TSA pre-check for investments. Same thing for banks. Same thing for background checks. You get background checked every time you get a new job. The same information that existed when you got the prior job should not have changed in theory, right? So mortgages, you have to do the check every time, the title property search every time you buy a house. 55 people have done that before you. The information has not changed. If you can take those types of things, put them on the blockchain, verify them, and really create the efficiency and the comfort that you don't have to repeat the stuff that really should be standard and static, that's when I think you kind of see some more exciting stuff happening from a use case perspective.
And that's why I think industry collaboration is absolutely critical, because in order to achieve that, we need to have agreed upon more standards and principles for how we're all agreeing to have KYC and onboarding, so that we don't have to onboard, as mentioned, across every different institution. So I think there's a lot of great work that's happening to foster that collaboration. Just one thing to mention is the Global Digital Finance Organization published a great report last week on tokenized money market funds and how different collateral use cases are working with many different TradFi companies.
How do you think the industry is getting in its own way?
I think sometimes the need to dumb it down is not the right way to say it, but to make things digestible, we often are having conversations with very sophisticated institutions, and we assume that they're light years ahead of where they actually are in their digital asset journey. And I think the points about approaching it like you're pitching a stock. So they want to understand what is the value proposition. They're probably coming from a traditional finance background where they want to be walked through logical, sequential understanding of what the value proposition is. And so I think taking an approach that, nothing is too basic, I think is very helpful to not intimidate people that are potentially going to deploy resources into the protocol, not alienate them, and help them really come along for the journey in a way that feels very approachable.
Institutions are like 5-year-olds. You got to kind of walk them through it slowly and carefully.
Yeah, I mean, they're curious. They're asking the questions.
So are 5-year-olds. Very curious.
It depends. But they are. No, they are. They're curious. My 5-year-old's just a wrecking ball. She's just like, doesn't ask the question, just does it. But no, they're curious. But I completely agree with Krista. Like the conversation is, hey, teach me about this. But you're probably 18 months from actually deciding to make the investment. So what you're doing at this stage is just trying to be one of the top 2 or 3 finalists that they're going to be continuing to have the conversation with. And that's the goal at this stage. And when they decide, hey, we're really ready to give dollars to this, they kind of like to spread it out, I think, right? Like you're hoping to get a portion of what, and it's a lot of the international sovereign wealth that are a little bit further ahead than the US institutions, I think. But that's kind of where the cycle seems to be moving from my perspective.
You guys are on your 5th vintage?
Yeah, we're in the market with our 5th venture capital fund right now. We also have early stage token and liquid token.
How has the profile of LP changed in 13 years, I think. Pantera is one of the first venture funds in crypto.
Yeah, our first fund was actually just a passive Bitcoin hedge fund, which still exists today. The profiles changed materially. The first venture fund was Dan Moorhead and a few of his Fortress and folks from eventually Galaxy deciding that they wanted to invest in venture, that this Bitcoin thing was super interesting, and that was like the beginning of it, and like, hey, we made a couple of really good investments. And once you make some good investments, they kind of stick with you. Our investor profile has increased from an institutional perspective. Banks, international, sovereign wealths are more interested now than they were in the earlier vintages. But we are still largely high net worth and family offices because they can move quicker, they can make their own decisions, they don't have these massive investment committees. But I will say we're having more ODDs with consultants. Like I said, we just got approved on this private bank, private wealth platform, which is huge. And we're having kind of unique product offerings now and special opportunities, which a lot of the institutions are super interested in because the blockchain industry has matured. So there's not just, hey, I'm going to invest in Coinbase when it is raising capital. There's a secondaries market that has developed, which has become very interesting for us. So the FTX bankruptcy is a great example. FTX has a whole bunch of assets. It filed for bankruptcy. Those assets had to get sold. And a lot of folks started having conversations, and it's like, okay, I will buy your interest in X portfolio company. I will buy some of the tokens that are locked for X period of time at a discount, and as they unlock, I can sell them. So there's been an interesting secondaries market. We call it special opportunities at Pantera, where there's very unique, usually single asset purchases that are somewhat large that a lot of people with a lot of money are very interested in, because it's not just this broad, hey, I'm going to invest in a 10-year venture fund. It's a very defined, it's a very finite, very specific, the one asset. You're not just putting money into a VC that's going to do what they want with it. So there's more increasing interest in the special opportunities as of late than we would have seen. And it's because they just exist now. They didn't exist before.
On the point about the profile of investor, through the ETFs, we've also seen that evolve a bit. So before the ETFs came to market, we saw kind of a barbell in who was investing in digital assets, at least from our perspective. There were retail investors who were doing things on their own, and then there were very sophisticated hedge funds who were also in the crypto space. But the middle ground was not really, I would say they were either underserved or they weren't getting involved for whatever reason. Now, the ETFs and the access that they've provided, making things much more approachable, much more similar to investing in a stock or other familiar equity exposures, has really opened up those doors. And then, of course, we now see the advisor community starting to get involved and really bring more of their clients into the fold as well. So I think that for us, how it's evolved is it's really bridged the gap between these two kind of extreme ends of the spectrum and made it a much more accessible asset class for all.
Yeah, well, you have part of that is channels opening up, right? When you open up the FA channels and the IRA channels, it's trillions of dollars of capital.
And the advisors are actually often incentivized to help get those crypto native investors into the ETF as well. And I think that's an interesting area where it's not necessarily new investment, but it's changing the shape of how that investment is held. Advisors that are able to get their crypto native clients to put their token into the fund via an in-kind investment can then say that they're managing that wealth. And that's another avenue of investment we're seeing, not new money into crypto, but a kind of change of flavor.
What's the penetration on the FA side? I mean, I know my cousin, he lives here in DC, he works at a credit union. He doesn't let his clients touch crypto, even the ETFs.
It's definitely evolved quite a bit. So going back to the points about some of these years-long conversations, oftentimes that's with advisors. And the conversation often started off as like, I don't want to talk about this at all. I'm not going to put my clients in it. I'm not going to let them get into it, to my client is breaking down my door. How can you help me get this exposure? Total 180 in the conversations. And I think that almost all of them now at least accept that they need to understand it if they're not more proactively leading the charge.
Yeah, I would just add as well, thinking of, agree on the crypto ATP side, I think thinking of tokenization as well. As traditional asset managers launch regulated tokenized products, also our client base is increasing as well. You know, we have new on-chain native investors who may not have been our clients in the past, so our client segment is increasing as we launch more tokenized products.
Okay, so we're having this conversation 2 years from now. What do you think would have changed the most in institutional crypto?
I think we're going to see a lot more tokenization.
Of what?
Of equities, of real world assets, maybe not real world assets
Private
that
credit?
short. I think eventually, but I think that the question of why should we tokenize Apple stock, it won't be a why anymore. It'll just be a given that it is.
We're at the why now.
Yes.
Yeah, so I agree with that. And the why, not if, to me, is also from an allocation perspective. It's not going to be why should I have crypto. It's going to be why don't I have crypto in my portfolio. And I think 2 years from now we see that because of tokenization, because of all the use cases. So yeah, I think it's going to be from an allocation perspective that'll change.
And hopefully more interoperability through standards and more secondary trading and liquidity.
And what do you guys think is the most underrated and overrated element of crypto right now being discussed? Is it vaults, Kathleen?
I think vaults are honestly, they're very exciting. I think that they are really early stage, but at the same time, I think the ability to have kind of rule-based pooled investment vehicles is pretty exciting. Thinking of use cases going forward, I would say the most underrated really still is tokenization infrastructure. I think that I think it's really unlocking with all the experts across every infrastructure function within our asset management firm the ability for programmability and smart contracts to really create new business models for how we operate.
I agree. I kind of stole my thunder with my last answer, but I think it's tokenization here too. Just going to a lot of traditional conferences, I think the buy-in still remains to be seen, but I think that it's going to be something that all have to embrace.
I don't know if this is underrated because everybody's talking about AI, but I think the combination of blockchain and AI and what that means and the things that people that are way smarter than me will develop with those two technologies, I think our entire operating system in the world is going to change once that develops more.
Is that part of the thesis of the new fund?
Yeah, we're definitely doing a lot of focus on blockchain for AI use cases. Yeah, it's almost like you don't even have to ask for it. It's just kind of like inherent in a lot of these projects. But yeah, it's a big
Amazing.
project.
Well, thank you all so much. Let's give them a round of applause.
Thank you.
We have a video next, right? Video from Congressman Boyle, who couldn't make it.
Let's play the video.
Hi, I'm Congressman Brendan Boyle. I wish that I could be with you this morning as I planned, but as you may know, in addition to being a member of the House Ways and Means Committee, I am also the ranking member of the Budget Committee. And as it turns out, the majority suddenly scheduled a markup for right now. So unfortunately, I have to be here doing my work as a member on the Budget Committee, but I hope at least this video will mean that I can be with you virtually. Either way, though, it's just wonderful to know that leaders from government, financial institutions, and the digital asset industry are all gathered at the Injective Summit to discuss the future of responsible financial innovation. There's no better place to meet than right here in Washington, where my colleagues and I work every day to attempt to ensure that the United States has common sense policy that both empowers the pioneers of this technology, but also protects the millions of Americans who use it. So we are truly at the forefront of new financial technology. But that also means we find ourselves sailing in uncharted regulatory waters. At the core of our mission as lawmakers, we have responsibility to ensure we are both protecting consumers and empowering innovation here at home. We want America leading when it comes to this technology. Fairness, clarity, and stability for consumers and industry stakeholders alike are the pillars of America's long-term competitiveness when it comes to digital assets. That means we must understand not only how current laws are applied, but also how to craft new policy proposals that address our changing future. So conversations like this are one that are exactly what we need right now to continue America's leadership in this area. Now, I'm proud to have supported several proposals in the digital asset space that have come to the floor of the House of Representatives, which I know are important to many of you as well. As a senior member of the House Ways and Means Committee, I'm continuing to engage in ongoing bipartisan negotiations related to tax policy in this sector. And I'm eager to see the progress that I think we can make in just the next couple months. I know that many of my colleagues, Republicans and Democrats alike, appreciate the relationships we've had the opportunity to build and the candid conversations we've been able to have with leaders in this industry. The attention that digital assets have received from Congress and the very fact that we are here is a testament to the tireless work by users of this technology and industry stakeholders who have enlightened Washington on how to legislate around such a rapidly changing financial landscape. The millions of Americans who use digital assets are depending on us to make sure the future of this technology is fair, safe, and innovative. I look forward to hearing all about the great takeaways that come from this summit, and I'm excited to see where gatherings like this take us in the months and years ahead. And hopefully next time, I'll be with you in person. Thank you.
Amazing. Well, thank you, everyone. The next panel is going to dig deeper into Congressman Boyle's comments about crypto's role in America's future and the importance not only to its economy, but also our national security. And Injective's John Mandel has the distinct honor and maybe the Herculean task of navigating the conversation with 4 of Congressman Boyle's colleagues in the House, and I'll let him take it away. Good luck.
Perfect. Hello. Thank you very much for joining us today on this historic day, talking about how regulation and business come together. I think it's a wonderful opportunity for us to do so. Why don't we get started? I know we have limited time, but before we start this panel, over the past week, we've suffered a loss of leadership in Washington. And I thought maybe I'd turn to you, Congressman Timmons, for some reflections on losing such a leader as Senator Lindsey Graham.
Sure, thank you for that. It's really been a very sad week. His abrupt loss was just shocking. I was with him 2 weeks ago playing golf. It was me, him, and my dad. We tied our last round of golf. I'm very proud of that. We spent a lot of time together on the golf course. He was a mentor, he was a friend, and it's hard to imagine the void that there is in the state, in the country, and really in global leadership. You're going to see at his funeral next week, the attendees are going to be are going to show his legacy. You're going to see a lot of people come from abroad, and he was very close with so many world leaders, and we don't have those relationships in the Senate or the House. They cannot be replaced. It will take a long time. And we're going to do our best to mourn him and to celebrate his life, but he would want us to get back to work, and he would want us to continue working hard to solve the problems that the American people need us to solve. So it is a huge loss, and we're going to celebrate his life, but yeah, he would want us to move forward and keep working hard.
In that spirit, and thank you for those remarks and starting us off. In that spirit, in fact, maybe I can turn to all of you and ask you your introduction into this new technology called blockchain. What first attracted you to this technology, and why do you think it's an important time to be looking at and moving forward with legislation on the blockchain?
Well, I represent the state of Wyoming, and Wyoming was at the forefront of putting together the statutory framework for blockchain and crypto. And so the first bill that they passed was in 2018, 8 years ago. And so it has been, I think, something that's been kind of at the forefront of discussions in Wyoming simply because we were out there ahead of most other states. Also, Wyoming is one of the largest energy producers in the nation, and obviously the data centers, AI, crypto, blockchain, all of this is going to require a lot of energy. We all know that, and when you come from and represent a state like Wyoming, you need to be innovative and you need to be involved in the discussions on these issues to make sure that we can meet the demand for what this kind of an industry is going to pose.
So I have the distinct privilege of serving in Congress and in the military. I'm a captain of the South Carolina Air National Guard, and I first got exposed to this through my cybersecurity endeavors. And I got a master's in cybersecurity 6 years ago. Working very hard. That ensure
to make sure that we're not stuck 5 years down the road with a law that really does not work for the industries that are being developed in this space. So, and if it's something that is working, we can reauthorize it. But the other aspect of this is sometimes our regulators get involved after we pass the law, and then they start regulating these industries, and sometimes they do it well, and sometimes they don't do it well. If Congress is constantly and consistently forced to revisit and look at these laws that we're passing, we're going to do a better job of overseeing and regulating the industry, making sure that we've got the right consumer protections in place, but also that we are not stifling the innovation that is really the hallmark of these digital and technological industries. There are many laws that I look at them right now that if there had been a sunset on them, I think we would all be better off. And so as we are working in this space, I just think that that's something that we always need to keep in mind, is how often should Congress be forced to revisit these rather than just passing a one-size-fits-all type of law that may not work 10 years from now.
That's very helpful. Congressman Timmons, I know you focus on national security issues and the role these new technologies, in fact, are giving and able to address some of the totalitarian regimes out there. Can you maybe elaborate on that and what you see developing?
Sure. So in addition to being on the Financial Services Committee, I'm also on the Oversight Committee, where I serve as the chairman of the Military and Foreign Affairs Subcommittee. And we had a great roundtable a few weeks ago. We had some experts in, and we talked about the role of emerging technology in combating authoritarianism. And so much of the global community is this friction between freedom, democracy versus authoritarianism and autocracy. And I think that between Starlink and digital assets, authoritarian governments are under siege because the biggest tools in their toolbox of repressing their population is capital, flight, the ability to not let you leave the country with your money, and information. And if you look at the Arab Spring in 2010, when there was a revolution on the verge, the first thing the Egyptian government did was cut off the internet. I was actually there. I was hoping to do social media about it. And when they cut the internet off, I said, get me out of here. But Starlink, there's no cutting off the internet when it's coming from space. Digital assets, the signs that say you have to declare more than $10,000 as you walk through the airport. I got a digital wallet on my phone, and as long as I don't give anybody the 12-word password I got, nobody can touch whatever I have. I have $112 in there, but I could have 10 billion. I wish I had 10 billion, but and nobody could do anything about it. So, and even there's democracies that have really strict capital controls. I mean, India, you can't leave India with much money, but Russia, China, extremely strict capital controls. So, the ability for governments to repress their population with emerging technology is going to be much, much harder. And I think that is something that we really don't think about as we talk about all these issues, but I think it has the potential to have one of the largest impacts on dealing with freedom in the world. So it's very exciting, and I think that the efforts that we're making to allow emerging technology to flourish are going to be a huge blow to authoritarianism, and I think it's something that I'm at least very excited about.
Thank you. Congressman Evans, what is your focus? I know you mentioned the law enforcement aspect, and there's been a lot of discussion about law enforcement recently on the Clarity Act. Can you sort of discuss with this group how do you feel those type of issues will be resolved in making sure innovation can continue while addressing law enforcement's concerns?
Yeah, absolutely. Great question. And I really want to build on the things that have been said before in terms of a lot of this just boils down to having those socialization conversations with law enforcement to help them understand the technology because you fear what you don't know. And so, as a 10-year cop, but also with a vested interest in this, just being able to serve as that bridge. I know my office has done a ton of work between a lot of the different crypto groups, but then also working with the law enforcement groups and just serving as that bridge and serving as that gathering point to be able to have those subject matter conversations to help folks wrap their mind around the new technologies, the capabilities of it, and how we can have that good working relationship together. Because again, then that helps bring the temperature down across a lot of conversations to where the good things, the first seminar I guess I ever went to in this space came with hand motions. And they really resonated with me. So I'm going to go through those hand motions right now to wrap out this point, which is the way a lot of folks think about technology is this way. It's vertical integration, it's intranets, it's silos, and that leads to the ability of technology to be used to repress. So we were talking about capital flight and information flow, because when you have that vertical integration in technology, that siloing effect, that lends itself to an element of control. And so as a small government conservative, I want to see crypto and blockchain and those technologies come because that's open, it's transparent, it's durable. That has a leveling effect to do everything that my partner here just talked about in terms of being able to break down those barriers that tyrannical regimes use to control their people. And so being able to have those conversations with law enforcement, being able to help them understand how to work with this technology so it can grow and flourish, and we can get back to that breaking down of silos, that breaking down of tyrannical regimes, that breaking down of the oppression of other human beings through more freedom and more durability in the financial space, that's incredibly important. And so building those bridges with law enforcement so that they understand how to let the good guys flourish, how we can put the rules of the road around the good guys flourishing, and not have loopholes that can be exploited by your cartels and your terrorist organizations and bad actors, human traffickers. That's kind of the node that my office has worked on very, very hard. To just have those granular subject matter conversations so we can get the terrorists, we can get the bad guys. You don't have billions of dollars of drug money moving around in this space, but you can also have that empowering, leveling, free effect from being able to leverage these technologies.
And Congressman Horsford, earlier in the day, we heard about the 3 pillars of the legislation moving forward. We had the Genius Act passed last year. We're now working on clarity. And you're working on the 3rd piece of that pillar, in fact, tax. Can you help us understand how that fits into the other 2 pieces that are getting a little bit more attention, if you will?
Well, you cannot have an effective digital assets industry without the tax infrastructure to help support it. So while we advance clarity and get that across the finish line, implement the Genius Act, the bill that I'm advancing, the Parity Act, which is bipartisan, is also about modernizing our federal tax code for digital assets and crypto and the future of where we're going. Why? Because one, we don't want any special treatment for digital assets, but we also don't want digital assets to be constrained by a tax code that has not been modernized based on how it's being used today and how it will be used in the years to come. I would build a little bit on my colleagues' points that yes, there's the global perspective, but there's also the need to democratize right here in the United States and to make sure that the tools and the benefits and the innovation of digital assets is readily available to everyday people, to consumers, to small businesses right here in America. And so that is where my legislation comes in, because it's really the 3rd stool, the 3rd leg of this stool that will help us have clarity, predictability, and parity. It's really that simple. And I look forward to continuing to work with the industry. I want to thank many of you who are in this room and Ian on my staff who's worked extremely hard on this, as well as my Republican counterparts, because in order to get this done right and for it to be long-standing, the policy needs to be durable. That means it needs to be bipartisan. It needs to transcend any one majority, any one White House. This is about creating a new industry for all of us. And that is why I'm excited to be a part of both today's conversation and the need to continue the work ahead. The reason that this is so important in places like the district I represent is 5 million people across this country are unbanked. There are people who do not trust traditional systems. They are looking for new avenues to do business. And I have small businesses who are struggling to keep up with the consumer demand in digital assets and in crypto, and we need to make sure that they're empowered to meet this need as well.
I guess I'll throw this up to all of you. I mean, we at Injective here, we are developing new technologies and new products on a daily basis almost. And the technology itself is evolving at a rapid pace. How do you design or how do you develop legislation to be able to address those type of changes, in fact, to make sure that we can continue to evolve and that we can continue to build here in the United States?
Well, I think that does go back to my idea about making sure that we have sunsets or reauthorization requirements in these bills so that they are not hardwired in forever. And we are able to evolve. The other thing that I would encourage all of you is to make sure that you are working with your legislator. You are working with those who represent you and bringing ideas to us. I tell almost every industry group that I meet with that if they have something that they need to have done, they understand their particular industry much better than I ever will. They need to help me to draft the legislation that's going to work for you. And I do think that that's a very appropriate way to do this, is that's in part how you're going to be educating more of us as well. You need to be engaged with us really almost on a daily basis with some of these issues because you are the experts in this area, and it is important that we hear from you as to what is going to work. And I know some of the challenges. We've got the issue of whether it was going to be your crypto would be a commodity or it would be a security. That's a debate that's been going on. The debate about whether you could have, you could pay out a dividend or some form of not necessarily interest, but something along those lines. That's the kind of debate that we're going to have because there are competing industries. And we're going to have to figure out how to basically thread a needle with these new technologies. We can do that, but at the same time, it's your involvement that's going to help with it. And then I will also say this as someone who kind of pushes back against a lot of regulation. Sometimes freedom and liberty will work as well, and the market itself will work things out. So I don't want to overregulate. I don't want to pass too many bills and statutes that substantially constrain what you can do and what kind of innovation you can bring forth in what you're doing. I don't think it's for us to dictate that. Sometimes we don't need laws.
So first, I want to reinforce Harriet's thought about sunset provisions. I think that all legislation should have sunset provisions, but particularly in emerging technology. I want to back out. Why is this important? It's important because there's value in efficiency, there's value in streamlining processes, removing middlemen, and just making our entire economy smoother, more transparent, and I think if you start there and then you say, all right, we got genius, we're going to pass clarity, parity, these are the first steps in the process of making sure that we have the right ecosystem to allow all of this technology to develop, to continue to create efficiencies, to continue to remove middlemen, because that is the value. And so I've been working on a bill that I was hoping to get into clarity, but it was going to complicate things jurisdictionally. It's on non-fungible tokens, and the future of tokenized assets is so exciting. And I think it's really, in some degrees, hard to even fathom the future of what that holds. I get excited about weird things. So I mean, like vehicles. So we all have a car. The car has a identification number on it, then you got to go register all that stuff. It's just a very complicated process. They tax the vehicle, and we're dealing with this thing about gas tax, vehicle miles traveled, electric vehicles. All right, no, just tokenize the vehicle. If you tokenize the vehicle, put it on blockchain, you can then monitor, you can pay taxes, you can address vehicle miles traveled, you can do all that stuff. I mean, that would transform our lives, and it would allow the government to be more efficient. It would remove all these different, I mean, how many government jobs are associated with the process I just told you? It's crazy. All right, I'll give you another one. Property records. So you have to, when you close on your house, you have to get title insurance. Why do you have to get title insurance? Because you have to prove that you own the land. You can tokenize land, and you could put that on the blockchain, and you just got rid of the entire title insurance industry, sorry. You got rid of, the recorder of deeds. How many people work there? I mean, across the country. Like, just think about it. And that's just two weird examples. So as we go through this process, our job in Congress is to make sure that and we're going to allow the businesses to continue to innovate and to continue to cut out middlemen and to continue to disrupt, because this disruption is positive. It will improve the lives of millions and millions of people, billions of people, and it is our job to make sure that we protect people, but that we create the framework to allow it to flourish.
Yeah, I think building on what's been said here, we want to legislate with the lightest touch possible. We don't want to have unintended consequences coming from congressional action. But by that same token, we don't want to have unintended consequences from congressional inaction. So it's one of those things where we have to get it right. And again, as a small government conservative, that means that I believe you all know how to do your jobs in your industry better than I know how to tell you how to do your jobs in your industry. And so it really boils down for me to the stakeholdering process and to pulling together these coalitions to have the conversations, because if industries and the adjacent partners can have these conversations and can sort out things and then come with consensus to Congress and to legislators, then to me that strikes that perfect balance, because it's now a consensus from the industry subject matter experts to allow industries to grow and to flourish, to make sure that we maintain our position of global dominance, but that also puts those common sense guardrails in that have been agreed upon by the people that know this way better than I do, because you live and breathe this every single day, and I get to bounce around across the length and the breadth of the U.S. economy. And so, again, I'll just go back to the law enforcement thing. You build that coalition if you have financial crimes investigators, and they're concerned about how can blockchain and crypto and this new space be used for criminal purposes, moving drug money around, human trafficking, things like that. You assemble that coalition, and I get smart blockchain folks, I get smart crypto folks to sit down with smart financial crimes investigators. Y'all talk it out, figure out what we need to do to have a safe, responsible set of laws and regulations in the space, and then just by convening those conversations, then we can get that lightest touch possible. But then the positive benefit of that is now everybody feels confident that this is going to be a responsible, well thought out, well developed solution that keeps everybody safe, empowers the good guys, but also has the tools to make sure it's not abused, and you get that lightest touch possible just through that coalition building.
Yeah, the word I'd add is opportunity. This is about creating opportunity for all the developers, the creators, the innovators in this space. And as you develop, create, and design, we want to make sure that there is a system in place that protects your investment and that protects the tools that you're creating from a digital asset standpoint. And why is that important? Because while there's tremendous wealth to be created from this, we want that wealth to be protected. and I really appreciated the comments around consumer protections, so that is a factor. Making sure that the regulatory piece of this is handled. And I agree, there's a need to not over-regulate, but coming from a state that has gaming, you want proper regulation so that you keep bad actors out. And you have a standard that people know and is predictable for them to reach. And third, you want the taxation and revenue structures to be in place, again, in a fair and impartial way so that, one, you can contribute your fair share, but also so that there aren't these areas where people can evade. And those are the types of principles, I would say, that guide good policymaking. But you're at the center of that. It's the people who should drive their representatives to develop good policy, not representatives dictating what this is for you and your industry and your expertise and the knowledge that you bring. And that, to me, is about creating opportunity for all of us.
Now, they gave me the signal to wrap up. We have about 30 seconds here. I can't let you go without putting you guys on the hot spot or the hot seat and ask you, are we going to get clarity done? Or are you going to get clarity back to you from the Senate and you guys be able to move on it?
Yeah, the House did its job several times on this issue. It will get done while more and more people stay engaged and hold their elected officials in both the Senate and the House to not walk away when we are so close to having good policy. It's not perfect. There are always improvements that can be made to any legislation. But let's move on the things where there has been agreement, where there is consensus, and let's complete the job by making sure that we have parity in place along with clarity and the Genius Act. That is the three-legged stool that will ultimately achieve the sustainability for digital assets, for blockchain, for crypto, and for where we're going in the future.
100% it gets signed into law in the next few months.
Senator Cynthia Lummis from Wyoming has been a real pioneer in this space. And as you all probably know, she's retiring this year. And so I think that there is a real incentive to get something out of the Senate.
Yeah, I think we get it done.
Very good. Thank you very much for taking the time. This was a fabulous conversation.
Hello, and welcome to Crypto in America's coverage of the 2026 Injective Summit here in the heart of the nation's capital. My name is Eleanor Terrett. I am the co-founder and co-host of the Crypto in America podcast. And to kick things off this morning, or this afternoon, I guess it really is, I am joined by Wyoming Congresswoman Harriet Hageman, who just stepped off the main stage after discussing America's financial edge in digital assets. Congresswoman, let's start there. I guess that's a question I've had for a while. Does America have a financial edge when it comes to digital assets?
Oh, I believe so.
Yeah.
Just in part because with the freedom that we have, with the way that our structure is set up, we have the innovators in this country. And so I believe that while we're working here to pass some of the laws that I think we need to have for the framework to make sure that this industry can continue to thrive or however it evolves, I absolutely believe that we are at the forefront in the world in terms of digital assets and wanting to make sure that, again, we can have the innovation that we need while we also provide the consumer protections that are necessary.
pretty much in any industry.
Now, is it something that needs to happen with clarity? When clarity passes, will we have that edge? Is it something that will not happen unless clarity passes?
Well, no, because I think that it's happening organically right now. I really do think that America has been in the forefront of the digital currency, the digital frontier, really. We've been at the forefront of that. I think that these laws are helpful, but again, we need to make sure that we are not creating more problems by passing laws that will constrain the industry or create unintended consequences. I think that that was a point that was made a little bit earlier. So I just think that we're being careful about what we're doing and making sure that we're considering all of the various industry groups that may be affected by this.
You mentioned the digital frontier. Wyoming has really been the digital frontier when it
Yes.
comes to digital assets.